Welcome to another video in which I will be providing some more free analysis and education for all of you. If you're new to the channel, I'm a top author on the TRADINGVIEW platform as well as running an educational company in which I teach all of my students how to swing trade using my strategies. Without further ado, let's get straight in the video and provide some free analysis and education for all of you. Okay, so there are a couple of pairs that I want to speak about today. The first one is AUDUSD. So let's go and see what we have basically from a weekly perspective on AUDUSD. So what we can clearly see from a weekly perspective is that we have this overextended W formation to the upside, and after an overextended W formation, you expect the market to go and retest the neckline of the W formation. In other words, the previous resistance, which is now turned support at this region, and you expect the market to go and retest it. It's a very simple concept in the market. This is also an area of previous resistance, now turned support. If a resistance level breaks to the upside, that resistance level is turned support. And we expect the market to go and retest it. Now, if we go down on the daily time frame, there is a very interesting fact. In fact, what you can see is that you clearly have 1, 2, 3, 4, 5 waves to the upside. Now, the fifth wave, this last long wave here, is basically the wave that creates the overextension in the market. In fact, you can see that this is the longest one. And this is something that happens over and over again. You will see the last leg that is creating an overextension in the market, and then the market will make the sharpest retracement. We've seen this lately on the weekly time frame with all GBP pairs. If we go on any GBP pair, for example GBPUSD, you will clearly see that overall on the weekly time frame, what did we have? We had 5 waves to the upside. In fact, we have 1, 2, 3, 4, 5. The fifth one is the longest one, creates an overextension, and then we get a sharp retracement to the downside. And this is something that happens on all time frames, and it happens over and over again. So here from the daily, we're expecting the market to go and retest this zone. Why this zone? Because this is clearly previous resistance. You can see all across this area. Again, resistance broke to the upside, and the market likes to go and retest these areas to test the liquidity that the market has at those zones. So based on this, we can expect the market to make that push down. Let's go and see what we have from a COT perspective. So basically, what are hedge funds doing with the AUD and what they're doing with USD. It's very important to always check what they are actually doing to confront it with your own technical analysis and basically what the price action is showing. And obviously the two things will always be basically one close to each other, because if they're buying, the price action will basically show bullish structure, and basically you will clearly see reflected in the price what they're doing, but it's always a good thing to go and check. So what do we have from an AUD perspective is a market that went basically nothing really changed with the last report. They did add 6k longs and they added almost 6k shorts as well, so nothing really changed. And this is, if they add shorts and longs, it usually means that the market will make a retracement before continuation. So basically they're shorting, but they are still adding their longs, because you know that they can't just basically change their positioning in the market too quickly, because they have the problem of having too much money to manage. Now, if you go and see what we have from a net position perspective, we went from minus 47k net positions all the way to minus 36, and then again to minus 46. So basically they added a lot of shorts. So you can clearly see that they added shorts 2 weeks ago, and now with the last report, nothing really changed. But overall, we're still expecting AUD to make a push to the downside. Let's see what we have on USD. So on USD, we can clearly see that we went from all the way from 31k net positions all the way to 11k net positions. So basically shorting USD. We can see it was extremely easy to predict all the downside movement on all the USD pairs with some nice impulses, corrections. You should have basically taken advantage of all the waves that USD showed us to the downside. And now with the last report, we can clearly see that we went from 11k net positions to 13k net positions. So basically with the last report, they added 900 longs and closed 500 shorts. So USD is getting stronger. AUD was getting weaker, not really changed with the last report, but overall AUDUSD, if USD is getting stronger in AUD already got weaker, we expect it to make a pullback, and that is exactly what confirms what it is basically confirmed already from our analysis. Now, there is a very interesting concept when it comes to Fibonacci. If you want information on the retracement, you have to take your Fibonacci on the impulse. If you want information on the next impulse, you have to take your Fibonacci on the retracement. Now, in this case, we have to take our Fibonacci on the impulse because we want information on the retracement, because that is what we're looking for. So if we take our Fibonacci from the low to the high of the impulse, what we can clearly see is that overall the market hasn't retraced yet to the 382. Now, often what will happen is that basically the market, the next candle will make again a push to the upside, and then the pullback will really start, or the market will just continue to the 382. But overall, basically that is something that you have to determine on intraday time frames. So on the 4-hour time frame, the monthly, weekly, and daily time frames are for direction. The 4-hour is for entry. This is extremely important. You need to know it. And what also you need to know is basically that usually the market will go and retest the Fibonacci levels that are aligning better with structure. So in this case, the market is supposed to go and retest the 50% and the 61.8, which is the golden ratio. So basically we're expecting the market to go and test this zone. So the 382 will only be the first possible target for the push to the downside. Overall, we already know that we want to see the market go and test this zone. Now, if we go down on the 4-hour time frame, what we can clearly see is that overall the market hasn't shifted environment yet. What could easily happen is that the market could create this W formation that then would lead for the market to push to the downside. But that is something that you have to determine, basically monitoring price action on the 4-hour time frame, or the market could break this zone, then you have previous support and resistance, and we can have our continuation to the downside. But that is basically something that goes, basically something that we will be doing with students. It's not something I can share here. Our rules for entry obviously is something that I will not share on any of these videos. So AUDUSD, what is the plan? What we will be doing with students? What we will be doing is we will be monitoring price action inside of this area. If the market will provide us one of our valid entries, then we will be taking this short to the downside, and we will be taking it with a minimum of a 1 to 3 risk to reward. Now, if you're asking yourself why I want to take risk to reward, is because if you only have a 30% win rate with a 1 to 3 risk to reward, you're still in profit. So even if you perform terribly, you're still making money, and that is the importance of having a 1 to 3 risk to reward, and is why is one of the fundamental rules of our strategy is we need to have a 1 to 3 when our valid entry presents itself. So in general, if the market will provide one of our valid entries, then we will definitely be taking this short with the students. If not, it means that overall the market has high probabilities of, for example, starting a consolidation phase here and then making the push to the downside, or even making a consolidation and then continuing to the upside. So it's extremely important to always monitor on the 4 hours and wait for one of your valid entries. You need to have a clear strategy in place. You need to have a clear set of rules. Now let's go with the other pair that I want to speak about today. I want to speak about GBPJPY as well with you. And what do we have on GBPJPY? Now, as we said before, the 5 waves to the upside, the market has created it on all pairs, including on all GBP pairs, including GBPJPY. So what we can clearly see is that we have 1, 2, 3, 4, 5 waves to the upside. And after 5 waves, the market made a clear, very strong retracement to the downside, very strong correction. And there is also another thing. This zone here is actually a consolidation zone. And basically what you expect when you have a consolidation zone is not for the market to go and test the high of the consolidation like we see here. What we expect, let's be more precise. What we expect is not the market to go and retest the high of the consolidation, but we expect the market to go and retest the low of the consolidation. That is something that you will see over and over again. The market loves to test the lows of the consolidations, and you can see this on all time frames, on the monthly, weekly, daily, 4 hours, on all time frames. So we expect the market to go and test the low of this consolidation zone. Now, if we go down on the daily time frame, what kind of price action we're getting? So on the daily time frame, we can clearly see that we have our impulse, we have our correction, and we expect another impulse to the downside to test this low. Let's go and do one simple thing. Let's take our Fibonacci from the high to to the low, because as we said before, if you want information on a retracement, you have to take your Fibonacci on the end, on the impulse. And the 32 Fibonacci retracement, as you can see, presents a fake breakout. The market closed above it, and now the market closed back below it, and from this zone you expect continuation to the downside if on the 4-hour time frame we will see confirming price action. What we want to see now is what we have from a COT perspective on GBP and what we have from a COT perspective on JPY. So basically what are hedge funds doing on the GBP and what they're doing on JPY. So let's go and see what we have on GBP. Okay, so what we can clearly see on the pound, we see that hedge funds have been buying very, very aggressively the pound. We went from minus 52k net positions all the way to plus 8k net positions. So extremely, extremely strong buying pressure on the pound. And what we have with the last report is basically the added 9k longs, and they closed 5k shorts. So basically pound is very, very strong. And what do we have from a JPY perspective is that overall, if you look at the net positions, we went from minus 47k all the way down to minus 33k. So basically JPY is getting bullish. With the last report, they closed 11k net positions, but they also closed 2k shorts, 2k longs, sorry. So basically they closed 11k shorts and they closed also 2k longs, meaning that overall they are still not buying aggressively JPY, but they are starting basically to shift their positioning in the market. And as you can see today, we got a very strong push to the upside on all JPY, basically to the downside on all JPY pairs, meaning that JPY got a strong push to the upside. So basically they've been buying JPY, and we could already see it from the report, which is of the 24th. These are the positions according to the 24th. So basically, if you start seeing that they're closing their shorts, it's only a matter of time before they start opening their longs. And that is the reason for which this push to the downside on all JPY pairs was very much expected. So on GBPJPY, we can't ignore that GBP had a strong buying pressure, but it's very important to say that the buying pressure was basically for the retracement. The buying pressure, the last report is of the 24th, so basically it's here. And that is why I told all of you, expect the market to make a retracement. I told all of you on TradingView, expect the market to make a retracement. That is exactly what the market did. And after that, this push to the downside should lead to the start of a new impulsive phase to the downside. Now on the 4-hour time frame, what do we have is a market that overall has broken structure and also is near to changing environment. It hasn't changed the environment yet, but is near to changing it. And I can show you basically how to determine the environment. That is part of the mentorship program as well. But basically what we will be doing, we will be waiting for the market to change environment. When the market will have changed environment, then on the 4-hour time frame, we will be monitoring price action for one of our valid entries for this push to the downside. If the market will provide one of our valid entries, then we will be taking this short. If not, it means that the market has a higher probability of continuing to the upside, and that is why we will not take the trade. If you enjoyed the video, make sure you smash the like button, as well as letting me know in the comments below if you enjoyed the video and what kind of other videos you want to see, as well as which pairs you want me to analyze. If you still haven't, make sure you go check out the mentorship program. It's a very complete program. You get all the rules of my strategies and then you trade them live with me. Each and every day I send you a new daily market breakdown showing you which pairs are satisfying the rules for entry, so guiding you in the process, as well as answering every question that you have within 24 hours in video format. I will invite you to go check out the next video.